What's up, everybody? I am Jaspreet Singh from theminoritymindset.com and welcome to The Minority Mindset. Insurance is one of those things that nobody likes paying for, but we all need it because, let's face it, life happens. The topic for today's video is life insurance. But before I get into that, I want to show you why insurance can come in handy really quick. So if you jump into your car right now and you drive to the store, chances are you are not going to get into a car crash. Okay, statistics tell us this. There are millions of Americans driving their cars every single day, yet the chance of you getting into a car crash is less than a fraction of 1%. Now, even though there's a very small chance of you getting into a car crash, everybody knows having car insurance is important because you never want to be in a situation where you get into a car crash without car insurance. Just like that, you never want to be in a position where your life is in danger and you don't have life insurance to protect your family. You can think of life insurance kind of like a worst case scenario shield or insurance that's there to protect your family financially if you were to unexpectedly die. Now, I know this is not a very fun topic, but it's better to be prepared for anything and plan ahead. Let's say you're married and you have a couple kids and you and your spouse make $50,000 a year. Now, you have some savings put aside and you have some investments, but if you or your spouse lost your job or you lost your income, then your family would be in financial trouble. The bright side is if you lost your job, you can at least apply for a new job and hopefully get a new job soon. But if you were walking down the street and something tragic happened, like you fell into a big pothole and you tragically died, now your family permanently lost another stream of income. Not to mention the fact that your family would have to deal with funeral costs and pay off any debts that you might have incurred, and they might have to take time off of work to deal with this loss. These unexpected tragedies are hard enough to deal with emotionally, but if you're not financially prepared, now the problem just got exponentially worse. At least in this case, your spouse was working, but there's a lot of households in America where there's only one major bread earner, and if you were to tragically pass away, now you have an even bigger financial crisis. Now, you can protect your family financially from going broke or bankrupt during an unexpected tragedy like this by getting life insurance. Now, while life insurance might sound like a gift from above, not all life insurance is good, so make sure you watch this video until the end. Life insurance is exactly what its name says it is. It's insurance on your life. If you die with life insurance, your life insurance company will come in and they will give your family a big check worth $500,000 or $1 million or whatever plan you decide when you are alive. Now, thanks to life insurance, your family can continue living their lives without the financial strain of losing an income. So you can think of life insurance kind of like that protection against losing an income stream for your family. But here's where things get tricky because all life insurance isn't the same, and that can affect how much money you gotta pay for your life insurance. We here at the Minority Mindset are all about being smart with your money. That means living below your means, building a savings cushion, and investing your money to build wealth. I believe that it should be everybody's financial goal to build up your investments to the point where you can live off your investments, their dividends, and their interest. That way you don't have to physically go to work to earn an income to survive financially. You have your investments to take care of you. Insurance salespeople hate when I say this, but once you get to that point, you don't need life insurance because you have enough money coming in from your investments to survive. See, you don't need life insurance because if you were to unexpectedly die, your family would just inherit your investments and they can live off of your investments, and if they needed to, they could sell your investments. If that is your financial goal, then you need to pick a life insurance plan with that goal in mind. You can buy life insurance for a certain number of years. So you could buy life insurance for 30 years or 40 years, and if you were to die during that term, so if you were to die within those 30 or 40 years, then your family would get a big check. If you don't die within those 30 or 40 years, then your family will get nothing. So term life insurance works kind of like car insurance in the sense of if you get into a car crash, you get a check. If you don't get into a car crash, you don't get a check from your insurance company. With term life insurance, if you die within the term, you get a check. If you don't die within the term, your family does not get a check. But remember your financial goal. Your goal with term life insurance is to build that long-term wealth through your investments. With a term life policy, your goal is not to have your family rely on your life insurance policy in order to survive financially. This brings me to the second kind of life insurance, which is called whole life insurance. With whole life insurance, your family will get a big check whenever you die, whether you die at 35 years old or 105 years old. At first glance, you might say, Whoa, why wouldn't anybody want whole life insurance? You are guaranteed to get a check. Well, that guaranteed money comes at a hefty price that you have to pay every single month for the rest of your life. To put it in perspective, I'm going to pull up some numbers on our sponsor Policygenius' website. That way you can compare the difference between the cost of a term life insurance policy and a whole life insurance policy. Let's take a look. Alright, so these numbers are assuming that you are a healthy 30-year-old male, and at the time of me recording this video, you could buy a $500,000 term life insurance plan for $19 a month for a 20-year term, or $30 a month for a 30-year term, or $54 a month for a 40-year term. So it's not a whole lot of money. But if you were to get a whole life insurance policy where you're guaranteed to get the $500,000, then it's going to cost you $421 a month for the rest of your life. Now, if I bump up the coverage to a $1 million policy, now a 20-year term is going to cost you just over $30 a month. A 30-year policy will cost you about $54 a month, and a whole life insurance policy, so now a guaranteed $1 million check, is going to cost you more than $800 a month. So a pretty hefty difference. If you want to run your own numbers and see how much life insurance would cost you with a free quote, I got the link to how you can do that in the description below. All you have to do is enter in a few pieces of information, which is very quick, and then Policygenius works with a whole bunch of different insurers. That way you can make sure you're getting the best price possible. The reason I like Policygenius is because, one, you don't have to deal with any pushy salespeople. If you have questions, they have experts that you can talk to, but these experts are not incentivized to upsell you anything. And second, they stand by what they do. If you can go out and find a lower life insurance quote anywhere else, they will pay you $100 for wasting your time. Minority Mindset is a partner with Policygenius. So if you use them, we will get compensated, but there's no additional cost to you. Their service is completely free for you to use. So if you want to learn more and get your free life insurance quote, I got the link to where you can do that in the description below. The reason whole life insurance is so much more expensive than term life insurance is because of two reasons. First, you are asking your life insurance company to invest your money for you. They're not acting as an insurance company to protect you from a worst case scenario type of situation. You are asking them to guarantee a big check when you die, so they need to factor in this extra cost into your monthly fee. And second, whole life insurance has a second component in it as well called cash value, which allows you to invest your money through your life insurance. So let's say you're paying $800 a month for your whole life insurance plan. Out of this $800, some of this money is going to go towards your death benefit. This is the money that your family gets when you die. Now, if you were to get a term life insurance plan, your death benefit would be like, what, $50, $40? But just to keep things simple, let's say $80 out of this $800 is going towards your death benefit. That means the other $720 is going towards that cash value. This is a savings account / investment account that you are building through your life insurance, but it's not as simple as what you think, so keep watching. So this cash value portion is a savings account / investment account that is held and controlled by your insurance company. This cash value portion is what everybody likes to glorify about whole life insurance because you can grow and invest and save your money tax-free. So you might think, oh, so I'm building equity in the insurance company and I'm building assets by paying into this whole life insurance policy, but here's the catch. For the first 3 years of your life insurance policy, pretty much none of that $720 that you're paying to the cash value is going to your own savings or investment account. That money is going straight to your insurance company's pockets, and it's going straight to your insurance salesperson's commission. Then years later, once that cash value starts to actually build up, it will grow by an average of 1.5% a year according to Consumer Reports. So your money isn't really doing anything. And then to top it off, using that cash value money isn't very either. I mean, you could cancel your life insurance and get your cash value money back, but that defeats the whole purpose of having life insurance. You could borrow against your life insurance money. Now you have to pay interest to your life insurance company for using your own money, or you could just wait until you die. But when you die, the cash value portion doesn't actually go to your family. It goes to the life insurance company. Because remember, that death benefit that we talked about, that's what your family gets. That $720 a month that you were paying, that doesn't go to your family when you die. So for people that are investing their own money, term life insurance is typically a much better option. You're getting the financial protection you need through life insurance for as long as you want. I mean, you can get a term plan for 20, 30, 40 years. And during that time, you still have extra cash now because you're not paying all this money to the whole life insurance account. So you have this extra cash that you can invest. And if you just threw this money into a low cost index fund, chances are you're gonna get a much better return than the 1.5%. Oh, and you also have full control over your money. Now here's another tip that you know. Beyond just the type of life insurance policy that you get, the second major factor that affects how much your life insurance policy is going to cost is how old you are when you get your life insurance policy. The younger you are, the cheaper life insurance is. So it can pay to lock in that cheaper rate while you're young, and now you have the protection that you need for yourself and your family. And now, once you build that wealth that you're looking for, then you can stop paying your life insurance because you don't need it anymore. You have wealth. And in terms of the size of a life insurance policy, you typically want something that's at least 10 to 15 times your annual salary. So if you're making $50,000 a year, then you typically want a life insurance policy that's at least $500,000. So life insurance is a financial instrument that you can use to protect your family against a tragedy. You just want to make sure you're using it the right way. That way you're looking after your family's pockets, not your insurance company's pockets. It's a small price to pay for a big peace of mind. If you still have questions about life insurance, or if you want to learn more about life insurance, our team put together an awesome article that goes over everything you need to know about life insurance, and you can read this article on our blog by clicking the link up here, and I'll also link it for you in the description below. Thank you for watching. If you enjoyed this video, share it with one friend, that way we can help spread the word. If you want to learn more about how you can make $1,000 a month in passive income through dividends on the stock market, I already made a video on this, and you can watch this video on YouTube by clicking this button right over here. Thank you for watching, and as always, keep hustling.